Good afternoon, students. So we are in the Business and Accounting Studies for Grade 10 syllabus. So today we are in the lesson number 8, the cash book and the petty cash book. Okay, so we are in the lesson number 8, the cash book and the petty cash book. So last lesson we did prime entry books, and the first prime entry book that we are going to learn is the cash book and then the petty cash book. Okay, so in this lesson we will be learning about the cash book and petty cash book. So we will be learning about introduction to cash book, the dual function of cash book as a prime entry book and as a ledger, and then recording transactions in the cash book, and balancing of cash book and other accounts, and recording transactions related to cash discount. So those are the things that we are going to learn. So this is a quite large lesson, and it is a very simple and easy lesson which we all can tackle. And then we have petty cash book. So we will be learning about petty cash interest and preparation of petty cash book with analysis columns. So those two will be the things that we are going to learn. And over the last months, we completed 7 lessons: background of business, business environment, business organization, introduction to accounting, accounting equation, dual impact of transactions, and prime entry books. Okay, so firstly, we are going to learn what is cash book. Okay, what is cash book? What is cash book? So cash book is a prime entry book which the receipts and payments of cash are recorded. The receipts and payments of cash by the businesses are recorded in the cash book using receipts and payment vouchers respectively as source document. So what is cash book? Now, when we take the cash book is a prime entry book. It's a prime entry book. And we record receipts and payments of cash. Okay, receipts and payments of cash. And we use what for this? I mean, as source documents. So for these, we will be using payment vouchers and receipt vouchers. So cash book is a prime entry book where we record receipts and payments of cash. And as source documents, we will be using payment vouchers for payments and receipt vouchers for receipts. Okay, so we will be using those two as the source documents for recording these transactions. Okay, so examples for sources of cash receipts for a business. Now we have two things now. One thing is cash payment, the other one being cash receipts. Okay, so we learned about what is cash book. Okay, cash book is simply a prime entry book. අපි අන්තිම lesson එකේදී ඉගෙන ගත්තා cash book is a prime entry book. So in the last lesson we learned about prime entry books, and this is the first prime entry book that we are going to learn. Cash book is a prime entry book, and we record cash receipts and cash payments in it. Okay, it's a prime entry book firstly, and we record what? Cash receipts and cash payments. So when we're recording these things, what are the source documents that we use? They are payment vouchers and receipt vouchers. Okay, payment vouchers and receipt vouchers. So now we are going to learn about examples for cash receipts and cash payments. Okay, so we are going to learn about those two now. Now, when we look at a business, like cash inflows or cash receipts to the business could be owner's capital. Okay, inflows, cash receipts. Owner's capital. So when owner invests capital, we receive money. Then cash sales. then cash sales, then cash received from debtors, cash received from debtors. Okay, owner's capital and cash sales. And one thing is you sell on cash, and the next thing is you sell on credit. And when you sell on credit, it will create a debtor to you. And when that debtor is settling the payments, a debtor අර තිබ්බ outstanding settle කරද්දී ඔයාට cash හම්බෙනවා. ඒකත් cash receipt එකක්. Okay. Then borrowing money. Okay, borrowing money. And cash receipt from other income. Okay, borrowing money means when you are going to a bank and receiving money, like when you are going to a bank and asked for a loan, and when you are receiving a loan, you are receiving money. Okay, that is a cash receipt, and that is a borrowing of money. And when you are borrowing money, it need not to be bank all the time. It could be a person as well. Okay, and the next thing is cash receipts from other income, such as rental income, investment income, and income from commissions. Okay, so those are the cash receipts. And then we are going to learn about cash payments. Cash payments. Cash payments. So cash payment means outside. From the business, you are making a payment. So when you buy goods, okay, when you buy goods for cash, that is a cash payment. Okay, when you purchase goods for cash or when you buy goods for cash, that is a cash payment. The next thing is, now here we took a loan. Okay, we did a borrowing. Now, when we repay the loan, when we repay borrowing, that is a cash payment. Okay, and then cash payment to creditors. Cash payment to creditors. Okay, now here, see, we learn about cash received from debtors. Okay, when we sell on credit, we will have debtors. And similarly, when we buy on credit, we have creditors. So when we pay the creditors, there is a cash payment, okay, which is recorded in the cash book. And then we have payment for other expenses. Payment for expenses. So when it comes to payment for expenses, it includes salaries of employees, electricity, likewise. Okay. And the next thing is payment for fixed asset. Payment for fixed asset. Let's say you are doing some production and you need a machine to do that. Okay, you need a machine to do that. And you bought a machine. When you buy a machine, you will be making a payment, and that is a cash payment. And machine is a fixed asset. Okay. And the next thing is, now here we learned about owner's capital, when the investor is investing capital. And similarly, when owner is withdrawing money. Okay, drawings. Okay, drawings of cash. Okay, withdrawal of cash by the owner for personal use, drawings, is a cash payment. So we learned about cash book. What is cash book? Cash book is a prime entry book, and we record receipts and payments of cash. And to record these, we will be using sort of like source documents as the evidence. So if it is a receipt, we will be using receipt vouchers. Okay. If it is a payment, we will be using payment vouchers. Okay. And then we went on to learn about what are cash receipts and what are cash payments, because in cash book we receive both these items. So cash receipts include owner's capital, cash sales, cash received from debtors, borrowing, and cash received from other income. And whereas cash payments includes buy goods for cash, repay borrowing, cash payment to creditors, and payment for other expenses like salaries, electricity, and then payment for fixed assets. For example, purchasing that machine I told you, and maybe even furniture. Okay. And then finally, drawings, or when the owner take money from the business, drawings, that is also a cash payment. Okay, so you can take a couple of minutes and write these two slides. So put the main heading as the cash book and the petty cash book, which is the main heading, and then you can put the subheading as cash book, and then what is cash book and so on. Okay, so take a couple of minutes and write it down. So we will be moving on to the next slide. Now we learned about what is cash book. Okay, we learned about what is cash book, and then we learned about first we learn about what is cash book. Okay, and then we learned about examples for cash receipts and cash payments. Okay, now we are going to learn about receipts. Okay, cash receipts. When a business receives cash from business, it would issue a document called receipt. So let's say that you are receiving cash. Okay, receiving cash. Then what you do is you are giving a document called receipt. When a business is receiving cash, the business would issue a document called receipt to the party who gave money to the business as evidence of such receipt. As this is also known as cash receipt or cash memo. A serial number is in consecutive order is printed on it. The receipt is issued with the details such as date of the cash receipt, reasons why it is received, and so on. So receipt is the evidence of cash received by the business. A duplicate of the receipt should be received by the accounts branch, and it should be used as a source document to record the receipt of cash in the cash book. There is no specific format for the receipt. Okay, okay, let me draw something. Okay, so okay, okay, let's say something like this. Okay, there are two persons. Okay, there is one person. Okay, 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 and we have the business. Okay, we have the shop. Now let's say this person, okay, who is a buyer. Okay, now this buyer, he buy goods. He buy goods. Buyer buy goods. And then what happened on the other hand is he is buyer is making a payment to the business. Okay, so buyer is buying goods from the shop, and then he is making a payment to the business. And once this payment is happening, okay, once this payment is happening, what happens is shop will give him a receipt. Okay, shop will give a receipt. Shop will give a receipt, and that is called the receipt. Okay, so shop will give a sort of a like document. Once the buyer is buying goods and making the payment, okay, when buyer is making the payment, okay, when buyer is making the payment, shop will give a receipt or shop will give a document, and that document is called receipt. And in this receipt, we have a few things. Okay, for example, what is the date of the cash received? Okay, what is the date? And then what is the reason? Okay, as well as it includes a unique number called serial number. Okay, so those are the things that are included in the receipt: date, reason for sale, and unique number. Now in this receipt, what happened is it will come in two copies. Okay, one copy for the buyer, one copy for the buyer. Okay, the second copy is for shop. Okay, second copy is for the shop. Now shop will keep this second copy. Shop will keep this second copy. Shop will keep this second copy as the source document. As the source document for receipt. Okay, that is what is happening. Now there are like sort of like formats for receipts, but this format is not sort of like very specific. Now there are two examples given here. You can see on top of it, it is mentioned as receipt or cash memo, and then it has the serial number. Then it has the name of the shop. Okay, this shop, the name of the shop is there, and then it says the amount of money that is being received. Okay, and it is prepared and checked by whom, and it is from whom it is being authorized. And in the below one, you can see clearly there are a lot of information on, like what are the items that are being sold, what are the quantities, what are the unit prices, and what is the total value. Likewise, all the information is there. Okay, so you can take couple of minutes and complete this note. So take couple of minutes and write this receipts, and then you can write this down. Okay, after writing this down, then you can keep space for writing this receipt format as well. Okay, so take couple of minutes and write this. Okay, so we learned about cash receipts, and now we are going to learn about payment vouchers. Okay, now we are going to learn about payment vouchers. Now, the payment voucher is a document prepared by the business with the relevant details as evidence that cash payments are made. It should be authorized by responsible officer. Every payment voucher is given a consecutive serial number. This is the written evidence for such payments because it should be authorized by a responsible person. There is no specific format for the payment vouchers. Okay. Let's look at an example. Okay. So we have a buyer. Okay. The same example that we look into. And then we have the shop. Okay. Now, buyer in the sense is buyer is also a small shop. Okay. Buyer is also a small shop. Okay. Buyer is also a small shop. Okay. Now, what happened is buyer is buying goods from the shop. Okay. Buyer is buying goods from the shop. And then what happened is buyer is making the payment. Okay. And when the buyer is making a payment, what happens is buyer will have to issue a payment voucher. Okay. Payment voucher. Mukada, you cannot, like when you're making a payment, you have to be responsible. So when you're making a payment, your business will issue a payment voucher. Now, payment voucher is the evidence or source document for a payment. Okay, payment of cash. Okay, so payment vouchers also have few things as in uh, uh, receipts. Okay, payment vouchers also have similar things as in receipts. So you will have to record like things like to whom you are selling. Okay, whom you sell, and then amount, okay, payment amount, and serial number. Okay, so those are the things that are included in the payment voucher. So payment vouchers also have sort of also don't have sort of a like specific format. Rather they can have different formats. For example, you can see this is a payment voucher. So it has Priyanis Company Limited Maharagama as on the top the name of this buyer shop. Okay, this shop. Okay, then it has all the details and it has a serial number 1255, and then uh, it has the people who prepare it, the person who authorize it. All the details are there in the below. Okay, so let's take a couple of minutes and write this note. I'll read it out once, then you can write it. Payment voucher. Payment voucher is a document prepared by business to serve as the evidence for cash payments made. It includes all the relevant details of the transaction and must be authorized by a responsible person or a responsible officer. Each payment voucher is assigned with a unique consecutive serial number. This document serves as written proof of the payment as it requires authorization by a designation person. So if you have made a payment, it should have a payment voucher. And if that payment voucher is there, there should be some person who authorize it. Okay, there should be some person who authorize it. Now it is not a clear example. Sort of like proxy example, I would say, is banks. When banks are issuing money, okay, they will have people who authorize the payment. If the amount is high, there are different people who authorize the payment. Okay, there is teller's signature who for like issuing the payment. Okay, nowadays you don't have to sign it. Sometimes it will be computer generated, so it is generated from your user ID. Okay, so all the details will be there. So take a couple of minutes and write this note. Did you all understand this? Make a point of payment also. Are there anything that you did not understand?
I understood, sir.
Vinoti, how about you, Putha?
Understood.
Have you guys finished writing this?
Yes, sir.
Yes, sir.
Rakesh finished writing this?
Yes,
Rakesh, have you finished writing this, Putha?
yes.
Finished writing. Okay. Okay. So now we are going to important part. Okay. That is dual function of the cash book. Okay. Now, when we talk about cash book, sometimes you might heard cash book is doing a function of two. Okay, cash book has dual function, and it is very important, and this could be sometimes examinable as well. In the exam also, you might be asked what are the dual functions of the cash book? What are the dual functions of the cash book? Okay, so when you look at the cash book, one thing that it does is it is a prime entry book. Okay, it is a prime entry book. Okay, It is a prime entry book. So when you are being told it is a prime entry book, what is happening? Okay, what is happening? Now, based on the sequential order, based on the order of the transaction, okay, based on the order of the transaction, using relevant source documents, you will record the transaction. Okay, that is a prime entry book. Okay, and on the other hand, it doesn't end there. It is also functioning as a ledger account. It is also functioning as a ledger account. Okay, that means it has format of a ledger account, and it has debit and credit side. Okay, so those are the two functions. One is it will act as a prime entry book. The other is it is also functioning as a ledger account. Okay, so therefore cash book performs two functions. One is it performs the functions of a prime entry book, the next being performing the functions of a ledger account. So in the exam, if someone comes and asks you what are the functions or what are the functions of a cash book, you can say it will perform the functions of prime entry book, and it is also performing the functions of ledger account. Therefore, it is performing the dual function. Or sometimes you can be asked like cash book is doing dual functions. What are these two? Likewise, it could be questioned. Okay, so take a couple of minutes and write this slide, dual function of the cash book. Write the subheading as dual function of cash book and then write it. Okay, now we are coming into a new part. Okay, we are coming into a part where recording cash transactions. Okay, recording cash transactions. Now, if you look at cash, okay, okay, cash is what? Cash is asset. Okay, if you look at cash is a asset. The receipt of cash increases asset and the payment of cash decreases asset. Okay, now let's say if it is asset, receipt of cash increase in asset. Okay, then payment of cash is what? Decreasing in asset. Okay, receipt of cash is a increasing asset and payment of cash is a decreasing in asset. So if this is the case, then we can apply double entry principle for that as well. So if the asset balance is increasing, what is it? What should we do? Usually, as per the double entry principle, we can debit it. And if the asset balance is going down, we have to credit it, right? If the asset balance is going up, we can debit it. If the asset balance is coming down, we can credit it. Okay. So cash is asset of the business and receipt of cash increase asset and payment of cash is decreasing asset. Therefore, the double entry principle for asset account should be applied for recording cash transactions in the cash book. Therefore, double entry principle for the asset accounts. එතකොට asset account එකකට පාවිච්චි කරන double entry principles තමයි අපි cash book එකට පාවිච්චි කරන්නේ. So when cash is received, cash book is debited. Okay, receipt of cash. Okay, receipt of cash is you have to debit the cash book. And if you are making a payment of cash, okay, you have to credit the cash book. Accordingly, all the cash receipts should be debited and all cash payments should be credited. Okay, so cash book, you have to debit it and credit it as per the double entry principle. Okay, debit cash book, okay, and credit cash book. Okay, so when recording the cash transactions, since the cash book functions as a ledger account, when the business receive cash, okay, the debit entry of the double entry of that transaction should be entered in the cash book. Since the cash book function as a ledger account, when business receive cash, the debit entry of the double entry should be recorded in the cash book. එතකොට cash receive වෙද්දී ඒකේ debit entry cash book එකේ record කරනවා. ඒ වගේම only the credit entry of the relevant account has to be posted in the ledger. එතකොට ledger එකේ අපි දාන්නේ අනිත් credit entry එක තමයි දාන්නේ. Similarly, a payment of cash is credited in the cash book and credit entry of the double entry should be in the cash book. And only the debit entry of the relevant account has to be posted to the ledger. ඒ කියන්නේ මොකක්ද? අපි දැන් cash book එක ගත්තම cash book එක prime entry book එකක් විදිහට ledger book එකක් විදිහට දෙපැත්තටම තියෙනවානේ. So when we receive cash, okay, when we receive cash, we are debiting the cash book. And only the credit entry has to be posted to the ledger. Similarly, when there is a payment of cash, we will be crediting the cash account. Okay, we have to credit the cash account and respective debit entry has to be posted to the ledger. Okay, and double entry ke then අපි මේක single transaction එකක් විදිහට ගත්තොත් එහෙම මේක transaction number 1 මේක transaction number 2 කියලා ගත්තොත් එහෙම මේ පළවෙනි transaction එකේ මොකක්ද අපි කරන්නේ? We have to debit cash book. Okay. Okay. We are debiting the cash book and we are crediting the relevant ledger. ඕක තමයි ඔය කියන්නේ, right? And even here, what we are doing is we have to debit the relevant ledger and we are crediting the cash book. Okay. Those are the two things that we do. So accordingly, the values that are debited in the cash book should be credited to the relevant account in the ledger. Values that are credited into the cash book should be debited to the relevant accounts in the ledger. So those are the two things that we have to do. And based on this, we will be doing a exercise as well. Okay. So you can take a couple of minutes and write this down.